All right, we are back. Alliance Academy, October 8th, 2025. We'll be here with Ben Reinberg for the next 30 minutes. Strap in and get a pencil and paper out for taking some notes. Ben, before we dive into frameworks and forecasts, I wanted to start this month because I know you and I have talked about it with something a little controversial and incredibly relevant. So right now, investors of all kinds are drowning in data, right? They've got AI reports, they've got Fed statements, social media, YouTubers, they've got bureau label statistics, revisions, and it's harder ever to know what's actually true. So let me ask you this. What if the biggest financial lie we've all been taught is about money itself? Because the truth is, most people think their cash is safe, when in reality, it's quietly melting away. So, Ben, what's the real story behind this lie about money, and how do we prepare for the unknown when the facts keep shifting?
Well, Chris, thank you. And welcome everyone to our monthly webinar. Excited to have you. We're going to talk about the lie about money. Just did a TED talk about this, which is really exciting. And what if I told everyone on this webinar that the safest place to put your money isn't safe at all? That the thing you've been told to do, save cash, is quietly, relentlessly losing its power every day. And for too long, we've been taught a lie about money. We've been told to work hard, to earn, and to save, and to hope. But hope isn't a strategy. It's a losing strategy. And I'm here to tell you that. See, savings accounts may look secure, but they're bleeding value through inflation, taxes, and the one thing you can never get back, time. And I'm not here today to talk about being rich. Being rich is about how much money you have today. I'm here to talk to you about being wealthy and becoming wealthy. So wealth is about securing your future, controlling your destiny, and building an empire that lasts for generations. And Chris, the secret to true lasting wealth isn't hoarding cash. It's owning hard assets. And my favorite hard asset is real estate, because real estate lets you turn uncertainty into opportunities. Look, I wasn't born into wealth. I learned this game the hard way. Back in the early 90s, I was broke. I had no net worth, no roadmap, but yet opportunity knocked. A 95,000 square foot industrial building landed right in my lap. And I had to raise $2 million in 30 days. Yep, 30 days. And I closed the deal, and I had 45% of the income left the building right after closing. Half the income gone overnight. Instead of panicking, I adapted. I subdivided, I renegotiated, I improved. And after 4 years later, we 3x'd, we tripled our investors' capital. But the lesson wasn't in the 3x. It was the greatest lesson I learned in investing was the ability to hold. Everything I've learned in 30 years of building wealth through recessions, crashes, and chaos has been distilled in what I call the hard asset empire blueprint. It's your shortcut to understanding how real, tangible assets can protect you, generate cash flow, and grow your wealth, even when the world feels unpredictable. Because the world is noisy and clarity is power. And that's exactly what today's session is about, Chris.
That's awesome. So, I mean, it's a great segue because a framework gives you a structure where you can make sense of things that are otherwise confusing. And 2025 has been a turbulent year with interest rate swings, geopolitical shocks, massive amounts of capital. I mean, record numbers of capital sitting in money markets. And so, as you look to 2026, and we all look to 2026, how does your framework help investors cut through the noise and make confident decisions?
Well, absolutely. The framework is what I call the hard asset blueprint. It's the same system I use to run my company and build wealth that lasts across cycles, Chris. It's been developed through trial and error over my 30 years. But I finally organized it and published it this year in my book, Hard Assets and Hard Money for Hard Times, because it was something I felt likely that it could serve a broader audience as a picture. They could customize, design, and manage their own empire. And so the blueprint rests on 4 cornerstones: data, which we use actionable intelligence; development, which is how we do portfolio construction; discipline, which drives cash flow management; and durability, which deals with your resistance planning. Then we layer in keystones like partnerships, scalable strategies, and deal structures. And finally, the capstones, which is adaptability, vision, and legacy. See, the blueprint isn't a theory. It's how I've survived different recessions, COVID, and now this area of sticky inflation and the debt overhang, Chris.
So I just got done putting that link in there because we want to make sure that everybody can follow along, because we're going to dive into this a little bit more. I want to pick your brain about different aspects of this. But for those who haven't seen it, who haven't yet read the book, obviously we encourage you to do that. But go into the chat, into the comments, you'll see a link. You can go get a free download. It's beautiful. It's 4-color. You can print it off. You can write on it. But just get that, and so that you have that in front of you if you're not driving while we go through this. So Ben, let's break down a little bit more, because again, markets are flooded with information. So, the Fed minutes, AI generated research, there's a lot of smart people listening to this, and they've got a lot of data. But with everything still being a little sticky and central banks kind of being cautious in this whole political fight that they're in, how should we process all this data into 2026, and where in the blueprint does that kind of get sorted out?
Well, the key is separating the noise from actionable intelligence. And data isn't power until it guides decisions. And right now, I'm laser focused on demographics. We have an aging population driving healthcare and medical office demand for our medical office fund. And I'm looking at policy signals. The Fed's 2026 posture on rates and liquidity injections will have a major impact on what happens in asset valuations and cash flows in commercial real estate. And we're looking at capital flows. There's still somewhere between $6 to $7 trillion still parked in money markets waiting to move, and potentially a large portion into commercial real estate. So by running these feeds through disciplined analysis, human judgment plus AI-powered tools, we turn our data into insights that drive acquisitions, financing decisions, and asset allocation. In 2026, the investors who will thrive will be the ones who can quickly connect data into action.
Yeah, being actionable is key. And so let's move into the second cornerstone of the blueprint. UBS just warned of a 90+% probability recession. Some people think that most people are living in a personal depression right now. But yet we also see melt-up type rallies yesterday in the markets and in hard assets, right? And so how should investors construct their portfolio for resilience in this environment, and which cornerstone speaks to this?
Well, this is where development, portfolio construction is critical. The trap isn't chasing what's hot. Instead, we balance multifamily and medical office, which is stable cash flow with trending supply and demand data. And we look at industrial and logistics, secular growth from e-commerce and AI data centers. And then we look at gold and Bitcoin, serving as hedges against monetary debasement to balance out our real hard asset holdings. And then selective equities or businesses, which is incremental growth layers to provide a diversified source of return on your capital. So diversification across asset classes, geographies, and deal structures is what prevents one shock from wrecking your wealth. This is why Alliance has investments across various places throughout the United States, such as the Sun Belt, and in key markets with strong underlying growth fundamentals. It's really important. If inflation lingers, your real estate and Bitcoin to protect you. If rates collapse, your yield assets carry you. So the portfolio is designed to perform no matter what 2026 throws at us.
Excellent. So, the third thing that you mentioned in your hard asset empire blueprint in the cornerstone is discipline. So a theme this year has been liquidity has been king, right? Lack thereof has caused violent market swings in the early part of the year. Excess liquidity globally is causing a rise in assets. So how do you think discipline, or how do you think about discipline and cash flow management going into 2026, especially with refinancing risk looming we spoke about on last month's webinar?
Cash flow is the lifeblood. In 2026, discipline will separate survivors from casualties. And here's what that means. You have to stress test every deal against higher cap rates and refinancing costs. You have to control operating expenses ruthlessly, vendors, maintenance, overhead. And for sure, you need to maintain reserves so you can buy when others are forced sellers. And I've lived through these markets where everyone looked rich on paper until cash dried up. And those who just didn't have discipline didn't just survive. They bought their competitors' assets at discounts. And that's the mindset to carry in 2026. There's going to be some great opportunities ahead of us.
Yeah, and I think that's really why, when I first saw your framework, it made so much sense because it distills it down to these fundamentals. And the fourth cornerstone, right, is what you talked about early on, your ability to hold, but you speak to it as the fourth D, which is durability. So it's all about staying power. And as CMBS is facing a $2 trillion debt maturity wall into 2026, how do they build durability into their portfolios? Obviously, cash flow is going to be part of it, but how does one execute that, and what goes into that cornerstone of planning?
Well, resilience isn't optional. Okay, it's survival. And durability planning includes fixed rate financing when possibly lock in predictability. That's why we try to look for long-term financing on our acquisitions. You need multiple exit strategies for each investment: refinance, sale, recapitalization. And you need liquidity buffers so you don't get squeezed. You need reserves. You have to consistently build up reserves. And, a little short story, Chris, in 2008, I had a deal that was struggling until my emergency fund saved me. But that experience hardwired me to always plan for worst case scenarios. You need reserves to be able to carry you through tough times. And durability means you're never trapped. You always have options. And in 2026, when the refinancing wave hits, that optionality will be priceless. Again, ability to hold, ability to hold, ability to hold. We keep preaching on all these webinars, and there's nothing going to be truer to form than when 2026 comes around.
Yeah. And so, I love the fact that obviously your background in commercial real estate, ties to a blueprint and obviously essentially a fortress, right? And that's what these cornerstones help you begin to architect. But let's talk about, you mentioned early on, and those who read the book or who take a look at this will have a more in-depth thing. And obviously we encourage you to dive into the Alliance Academy resources and also the newsletter Alliance Intelligence. If you're not currently following that, you can scan the QR code and get to those resources. But talk to us about the keystones, because outside of the four cornerstones, what are the highest impact moves investors should focus on? And what is the short summary of where keystones and capstones in their hard asset empire blueprint factor into those who haven't yet read the book?
This is where keystones and capstones come into play. Flexible deal structures allow you to pivot when market shifts. Synergistic partnerships, they'll expand your reach and resilience. Integrated asset management turns data into execution. That's really critical. And scalable growth strategies let you double down when opportunity strikes. And then the capstones, which is adaptability, legacy, and vision. This isn't just about making money in 2026. It's about building wealth that outlives you, so your family thrives in 2036, 2046, and beyond. This is also looking at your families and your kids and how to build a future and succession plans. And that's the lens through which I evaluate every move.
Yeah. So we love to keep these, short and sweet and to the point, guys. But if you have a couple questions you want to ask, please throw them in the comments so that we can get to them here, because we're coming around the bend on some of these plan talking points and questions that we had. So, Ben, when you think about leaving investors today with one clear action step as they plan for 2026, because we're coming into fall and holiday season. So really, this is, the last time we'll formally communicate with them coming into the end of the year. They'll be planning just like you will be. What is the one thing as an action step that you want them to take away from today's message and coming into the fourth quarter here?
I want to simplify it. Pick one area, whether it's upgrading your data, tightening cash flow discipline, or rebalancing your portfolio, and act on it now. Don't wait for perfect clarity. The market never gives it. It never will. Use the Hard Asset Empire Blueprint as your guide. And you'll not only withstand whatever 2026 brings you, but position yourself to thrive. I'd like to encourage you to check out all the resources I have on my website, benreinberg.com. That's benreinberg.com. And the Substack to follow us on our blog is subscribe-to-ben.com. And if you're interested in investing with us and building wealth for you and your family, visit us at alliancecgc.com. That's alliancecgc.com. So the opportunity in the coming year is going to be a tremendous for everyone, but it will also be punishing for those who are flying blind. And the Hard Asset Empire Blueprint is a way to harness your vision and strategy into a cohesive vision that can also weather any unforeseen storms that come. So thank you to everyone who attended today or one of our webinars this year. We wish you a safe and happy fourth quarter. It should be exciting, and look forward to your stories of success in 2026.
It's awesome. Well, we thank you, Ben, for every month for being here with us and for sharing your wisdom with us. And guys, again, I've read the book, I think 3.5, 4 times now. I think the blueprint is brilliant, and I use it in my own thinking every day. And Ben, I want to thank you for putting it out there. I encourage everybody to get a copy of it or get connected with Ben any way that you can. If you aren't already, and if this is your first exposure to it, there's a lot of resources there. So as a third party, I'll just endorse you for all the great stuff you're doing out there.
Yeah, and everyone that joined us online live, we're on Instagram Live right now, coming from my office. So thank you for joining us. We have people from all over the world joining us on this webinar. So hopefully everyone enjoyed it, and we appreciate it.
Awesome. Thanks, Ben.
All right.